Good afternoon, ladies and gentlemen, and welcome to the Totally PLC investor presentation. For your information, throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where appropriate to do so. These will be available on your Investor Meet Company dashboard. Before we begin, we'd like to submit the following poll. Finally, I'd like to remind you this presentation is being recorded. I'd now like to hand you over to Wendy Lawrence, CEO, and Lisa Barter, Finance Director of Totally PLC. Good afternoon, Wendy.
Thank you, Paul, and good afternoon, and thank you for everybody that's joining us this afternoon. Hopefully you can see the presentation that's on the screen in front of you. The idea is I'll work through the front end of the presentation, and then Lisa Barter will pick up and add some of the financial elements. And you'll hear me say a few times during the presentation that Lisa will add a little bit more detail on that when she gets to it. So please bear with me, and we will get through that. So without further ado, I'll move on to slide 1. So for those of you who are not familiar with Totally, before I get into the details of this, but we are an organisation that works in partnership with the NHS in England and the other NHS bodies around the UK, including NHS Scotland, the Irish Health Board, and obviously the same in Wales. We tend to work hand in hand with the NHS in all areas where demand is actually outstripping supply. So we provide a whole range of services and do that by working across 3 divisions. As I go through the presentation, I'll tell you more about those divisions, what size they are, and the contribution that they are to the business. And I'll also explain to you how they've been impacted with the coronavirus and the pandemic, and also to explain to you why the company took the decision to remove its guidance from the market at this time, and hopefully you'll be able to see how that decision was reached. So looking back on last year, it was a great year for Totally. We'd been busy over the previous 3.5-4 years with a few acquisitions. We completed the last acquisition of Greenbrook Healthcare in June 2019. And Greenbrook, as a lot of you are familiar with, work in the urgent care spectrum and sit inside our urgent care division alongside our other urgent care company, Vocare. So that was in June. We launched our insourcing business, Totally Healthcare, back in October 2019. And that was done as a startup inside of Totally. And actually, when Bob Holt and myself first met, when Bob came on board with Totally, and we started our acquisition strategy, the first company that we spoke to about acquiring was an organisation called Medinet. Medinet at that time were the market leaders in insourcing, and we didn't acquire that company, as you'll know. We actually came to the table quite late, and we lost out to private equity. But a couple of years later, the chief exec that was at Medinet, a lady called Marie Lee, contacted us to say she would be leaving them. Wasn't quite working for her in terms of the way that private equity were taking that organisation. And we started to talk to Marie about the art of the possible. And so in October last year, she joined us and we launched Totally Healthcare. We started working in the Republic of Ireland, and we did that. That was a conscious decision by us because Marie had no restrictive covenants around that time. In the Republic of Ireland, and it was a market that was there to be tapped, and we did very well in the first few months that insourcing was operating, and Lisa will tell you a little bit more about that in the finances, but it went really, really well, so really pleased with Totally Healthcare. We also paid our maiden dividend to shareholders of 0.25p, and you will see in the RNS that we intend to pay the final annual divvy later on this year. And we also completed our work with the Care Quality Commission on looking at the quality of our services, and 97% of our services are now rated as good by the Care Quality Commission. We have one service that still requires improvement, and that is we know what the issue is, and it's around split site working, and that's part of our plan this year to address that. But in terms of care, there are no concerns around care. So it was a good year for us. It was a busy year. We appointed to our divisional structure to make sure we had strong leadership teams in. And then right at the end of that financial year, as I'm sure you're all aware, the UK was hit by COVID-19, the worldwide pandemic. It hit us a couple of weeks before our year end, and we found ourselves being asked to stand shoulder to shoulder with the NHS to deliver services face to face to members of the public, and we saw demand for our urgent care services go through the roof. We saw increases that took us about 400% above normal demand within our 111 service, and the NHS, including NHS England, asked us to provide additional services during that time, of which we did. We responded quickly, very proud of our staff during that time in terms of how they worked with us to manage those services. And of course, there was ups and downs across the business. We all know that as individuals, we were asked to access healthcare via 111 or the online 111 service, and to avoid presenting face to face. So we saw the demand for treatment, face-to-face treatment in our urgent centres decrease. We saw our planned care services ramped down, and also insourcing was stopped during that period. So every division was impacted differently. But I think it's fair to say that the way we responded and worked with the NHS certainly strengthened our relationship with the NHS and enhanced our reputation for being an organisation that could really, really work well. Of course, new contract awards during all that period of time, and going back to the election and the purdah around there, means that new contracts have not come out as we would have expected. There hasn't been the same number of tenders come out. We are growing because we pick up new business all the time, but the big chunky tenders that we're used to coming out and going in the market are not around at the moment, and we don't know when they'll be back and available for us. And that was part of the reason for why we decided to withdraw guidance. The majority of our income is actually secured contractually, so we know that our mid to long-term prospects remain good. But everything's moved to the right. Everything's just moved over a little bit for us. And again, we're working hard to look at when we can re-establish service and where we will need to be with the pandemic going forward. If I now move on to the divisions within Totally. So our largest division is our urgent care division. That's comprised of Greenbrook and Vocare. And as you will see on the slide, we are unique in the fact that we now provide all of the services that are covered within the urgent care pathway. So I've already mentioned 111 at length, and we continue to provide the capacity required to meet demand. We are the largest private provider of urgent treatment centres across England. We now have 24 urgent treatment centres. The latest one opened on the 1st of July, and that was in Watford. Originally, that was due to go live earlier in the year at the 1st of March, but obviously because of the pandemic, there was a delay. But it did open, and it is now live from the 1st of July. We continue to be on standby with the NHS and prepared for a second wave of the pandemic. As we know, when we read the papers every day, no one's quite sure of what's going to happen or when, or even if. But obviously our services that are there are always there day by day, and those additional services that were commissioned during the pandemic all remain in place to react to that. We're seeing regional lockdowns, and obviously where we provide services in those regions, we will again be impacting on our pandemic management services. We're also being asked to look at what might happen if the coronavirus becomes a seasonal impact, a little bit like the flu. You know, we're always busier during the winter months as patients become ill with the seasonal viruses. And at this point in time, there's a lot of planning and a lot of research underway to see whether we think that coronavirus may fall into that category. And again, it's just adding to the unknowns of what we do. But Again, we're ready and we're prepared, and we will react accordingly. Urgent care is our largest division. It's over 90% of our revenues. You will have seen in recent RNS that we recently secured over £20 million worth of business by contracts being extended. And this is what we're seeing in the absence of new tenders coming out. The contracts that we already have are being extended. And when those extensions come up, we do take the opportunity to revisit terms to make sure that, you know, those contracts are operating to the best that they can perform. And so it's a new way of working for us. And I think what we will see is business growth will come about via partnerships and commissioner relationships rather than big tenders coming out. We don't know if it'll ever return to that, but again, it just adds to the uncertainty, I guess, of the world that we're operating in. So if I move over to planned care is about 8% of our overall business. This is where we deliver outpatient services. Typically, we provide outpatient services in GP practices. So you can imagine, as GP practices have not been seeing walk-in patients, our planned care division almost stopped. We also provide physiotherapy, musculoskeletal physiotherapy, and we're in discussions with the NHS about moving into respiratory physiotherapy services post-coronavirus. As we all know, it has a respiratory impact. We work in prisons, and again, services were turned down and stopped because of coronavirus. Again, our income is contracted, so we know that those contracts are there, and we know that all of the revenues and the time left on those contracts will all move to the right. At this point in time, we are providing approximately 20% of activities that we were providing pre-coronavirus, and are in daily talks with the NHS about how we restart those services. But I think it's fair to say that planned care was the one that was impacted the greatest once elective workload was stopped. Moving over to insourcing, this is Totally Healthcare. So this was the business that we launched in October. It was going very, very well. Feedback from all of our commissioners was very positive. We started, as I said, with business delivery in the Republic of Ireland, but in the first few months of operation, we had already secured contracts in Republic of Ireland, Northern Ireland, Scotland, and across England. All those services were stopped once the elective work was turned down, but we did actually restart insourcing services and started delivering again back in the Republic of Ireland in June. And rather than just working at weekends, we did a big waiting list initiative, and we worked 7 days a week in June over in the Republic of Ireland, delivering endoscopy services, where we'd taken a team of consultants, operating staff and nursing staff in to deliver that initiative. Our order book and contracted revenues was already really healthy for the forthcoming year. And again, we wait at this point in time to see which hospitals we can go back and work in sooner. And you know, just as an example really of how the scenes are changing, we were due to recommence work in England in the northwest at the end of July, but we were contacted last week and said that that would need to be put back a couple of weeks because the R rate for the coronavirus had increased somewhat in that local vicinity. But on the other hand, in another area in the northeast of England, where we weren't expecting to start until mid to late August, that's actually been brought forward. And again, it's just a case now as responding to commissioners and watching what the R rate on coronavirus is doing. So lots and lots of moving parts. They're the reasons as to why we withdrew our guidance, along with the tender portfolio changing. We remain very, very confident in what we're doing, and obviously during the time where elective services were stopped, NHS waiting lists grew, and you would have seen in the press that pre-coronavirus NHS England was sitting with approximately 7 million patients on its waiting lists for surgery, and post-coronavirus a couple of weeks ago they said that there was over 10.5 million people waiting for service. So we know our order books are going to be very busy. But until the NHS can restart its elective capacity at pace, it's obviously going to impact on us. So without further ado, I'll hand over to Lisa to take you through some of the finances and add a little bit of colour to what I've already said.
Thank you, Wendy. So good afternoon, everybody. So presenting, in our opinion, a set of very positive numbers, increased revenue and increased adjusted EBITDA, and a good level of cash at 8.9 million, as well as an improved gross margin. We also paid our maiden dividend to investors, as Wendy said, at 0.25p, and proposing to pay our final dividend in October, of course, subject to shareholder approval. Revenue was 36% up on last year. The majority of this growth is as a result of the acquisition of Greenbrook in June 19. But of course, during that period, as Wendy said, we saw a very solid start from our insourcing business. So we went from zero to so we delivered £1 million in FY20. And as we exited the year, had we not been hit with the global pandemic that is COVID-19, we would have been delivering £400,000 worth of revenue from our insourcing business in April. Of course, this was unfortunately cancelled. We would have been at that run rate of 4.5 million approximately, and we very much expect to be getting back to that level very quickly, given that although we didn't work in April and May, we have worked all of June, and the insourcing team are now delivering service again fully and have a pipeline of £2 to £3 million currently, with those ever increasing waiting lists and those longer waiting times. We're very confident of getting back to that exit run rate very quickly. We're looking at the business delivering a 5 million this year in 21, getting to 8, getting to 12 million revenues. So with the global pandemic, we did not see particularly any impact on our FY20 results. Of course, it was just the last 2 weeks of our financial year, so we did not recognise additional revenue earned relating to COVID-19 in FY20. The majority of this hitting us in Q1. So we've invoiced now £2 million relating to COVID-19 response, be that additional services, so extending our current services, new services like quarantine at Heathrow Airport, or indeed just simply the response. So we had phone call at midday. We must get all of our responders on, our call handlers for the 111 service by 4 o'clock. And obviously that came at a cost with enhancements, bringing extra people on shift. And we were able to invoice that, and we have been paid more than 50% of that 2 million we have invoiced during Q1. So with regard to organic growth, much lower than we expected in FY20, very much as a result of the impact of lower new business tenders due to the uncertainty caused by Brexit and that purdah in the run-up to the general election, meaning there were no new NHS contracts. However, we did retain more than 95% of our contracts, just 2 contracts that just normally expired during the period, and we resecured more than £20 million of contracts in urgent care. As Wendy mentioned, we have a contract, Watford UTC, it was a Greenbrook new business win that opened on the 1st of July, just delayed by 3 months. And Manchester, the largest dermatology contract, or the largest contract, in fact, won by Planned Care, that has been delayed and it's mobilising in October, but we're very positive about the fact that it is continuing as planned and will be mobilised. That will deliver, as announced, 1.7 million of revenue for the Planned Care division come October. As Wendy mentioned, we are anticipating less contracts won through former tenders, and our new normal to be through existing and new relationships with local commissioners. There are, of course, more than 200 CCGs up and down the country, and we're working on those relationships we have with our current commissioners, and we've invested internally in our own staff to concentrate more on development and making sure we're ready for any new opportunities that might arise in any of our services and new ones. So we believe we've proven the value of Totally working in partnership with the NHS, and we remain shoulder to shoulder in delivering those frontline healthcare services. So all in all, on revenue, our current run rate and our pipeline certainly we believe positions us to exceed the revenue we've reported in FY20, and that is excluding any COVID income. I just move on to the next slide. Hopefully you can all see that's quite small. The profit and loss account. So underlying EBITDA, so that's excluding the exceptional costs we've booked this year. That includes the impact of IFRS 16. So many of you may be aware of a new reporting standard that took effect from the 1st of April 2019. And it takes all of those operating leases, so those that would have normally been your rentals, it takes them out of the P&L and puts them on the balance sheet as right-to-use assets. And what that's done for our financials is to improve our EBITDA by 1.6 million, and it has increased our depreciation by around the same amount, or bar a couple of $100,000 of finance costs, which is the impact of discounting that. So net bottom line is no impact at all. So we have now a more efficient urgent care structure, delivering good quality services. Those of you that know us well will appreciate that we've worked very hard to improve the services delivered, particularly through Vocare. And that better performance has been rewarded with benefit of much lower KPI penalties as a result of that. So we are exposed to performance penalties when we're not working so well. And with that much cleaner performance in Vocare, that has allowed us to not, or we don't have to provision so highly as we did previously for KPI penalties. So we have a good grip on commercials and financial management. We believe, therefore, we have created a much more sustainable, we are at a sustainable EBITDA in urgent care and delivering margins of around 17%. Of course, I must add there that insourcing margins in that business are pretty much double this level and an average around 35%. Within the underlying or below the EBITDA, we have a impairment charge for planned care. So we've seen an impairment on this division before, and we felt that obviously auditors at this point in time very cautious around growth rates, and planned care is as Wendy said, is the one division most impacted by the turn down in elective procedures. So we felt, and we just discussed this as a board, that given the uncertainty caused by the pandemic, we would be prudent in taking more of an impairment this year than perhaps we would have. We had probably wouldn't have taken an impairment at all had it not been for COVID-19. And so therefore we've taken a value of 1.5 million to ensure that we have some headroom also going forward. Obviously, I don't want to be in a position where we're impairing again in the near future. So we've reduced the value of goodwill held for planned care division, obviously being 3 acquired businesses in that division, that's now at 7 million. We have also in exceptional items, $500,000 of acquisition costs, that relating to the fundraise and associated costs for the Greenbrook acquisition that we didn't take in last year. So all in all, I'm anticipating next year maybe a $500,000 impact on our business as a result of planned care downturn, and no more than that. Just looking at the cash flow, so always a critical measure, and we manage it very tightly. We continue to operate without debt and are pleased to report 8.9 million and a good net operating cash generated in the period. I should just reiterate, we receive no upfront payment. We do not have any prepaid revenue recognised. This is all cash belonging to Totally. I should mention that we do remain in a net liability position on the balance sheet, and the board, of course, are regularly monitoring this, and we do remain very comfortable with this position. I've worked in healthcare quite a long time now, and this is a very familiar position to be in terms of the balance sheet in a healthcare company. So if I just hand back to Wendy now to talk a little bit about our strategic approach going forward.
Okay, so those of you who are more familiar with Totally will know that this strategy for growth has been there for a long time, and it's as valid today as it always has ever been. So we, as you know, work in partnership with healthcare bodies across the UK, and have exploited our relationships to make sure that we can increase our market share over the years. We maintain key strategic relationships, and it was very pleasing recently to have the direct feedback from Simon Stevens himself when he thanked Totally and every member of its staff for standing and delivering frontline service. You will see on there that the board has restated that we do remain acquisitive, but I think it's important to say at this point in time that we see the organic growth as the important part of the business, and there are no companies that we are currently in detailed dialogue with around joining the Totally group. There are a few interesting ones around there, and if we were to bring them into the group, they would be on the small side. They would be plugging gaps more than anything. And I guess for us, the next stage where we will be looking is in tech. A lot of what we did during the pandemic management was to harness technology and to reduce face-to-face contacts and increase video usage. And we did that in some areas of healthcare where you would not necessarily expect us to be doing that. And one of the things was verification of death, when it became very difficult for our staff to go into COVID households and protect them and members of the public. So using tech for not just consultations, but also the more difficult sides of healthcare management. So I guess, and just summing up really from the whole presentation, we believed we had a good year last year, and are very, very proud of everybody that works with us. We spent a lot of time integrating Greenbrook into the group during the summer, and that's gone really well. And as I say, we're now working in 3 very clear divisions with leaders in those divisions that really know what they're doing. Coronavirus, we remain ready and waiting, and nobody really knows what that brings in, but we all of our services are sitting there enabled. We know that waiting list growth will bring us opportunities going forward, and when elective care starts to restart at pace, which it hasn't done yet, when GP surgeries open up across the country, and we can re-establish our outpatient clinics from those surgeries and bring in physiotherapy, we're ready. But for us, it's a very changed environment. I don't think we'll go back to being and delivering services as we did. It will be a new business as usual, and some things in there are really exciting and really good for us. So we believe the pandemic gives us significant upside. I don't particularly believe it's right for us to shout that from the rooftops, because obviously it's a very difficult period for everybody, but our mid to long term prospects remain good, and I hope that that's provided you with a lot of the answers to the questions that I'm sure you've had. So thank you very much for listening, and that rounds off the presentation.
Many thanks, Wendy, and thank you, Lisa, for updating investors as part of your roadshow. If you please continue to submit your questions using the Q&A tab situated on the top right-hand side of your screen, we'll give the company a little time to review them. Just while Wendy and Lisa take a few moments to review those investor questions submitted already, I'd like just to remind you that recording this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. And lastly, just before I hand back to Wendy and Lisa, I'd like to remind you that your feedback is very important to the company. Immediately after the presentation has ended, you'll be redirected for the opportunity to provide that feedback so the company can better understand your views and expectations. Wendy, Lisa, I know I haven't given you a huge amount of time to have a look at the questions that we've come in. We have had some pre-submitted questions as well. Perhaps I could start with those if that's okay. And perhaps I'll direct this one to you, Wendy, if that's fine. The first question we've had in: would you consider changing names of subsidiaries and having 3 Totally divisions rather than all the different names that you have for the different divisions?
And I think, thank you for that, Paul. I think the answer to that is yes. Yes, we would consider that. And actually, moving this year into working in divisions has been the first step of that, of bringing in new leadership teams. One of the things that we want to assess very carefully, and we've had a bit of mixed feedback, and it's something that the board will be looking at over the summer, is because those brands are established with the NHS, we wouldn't want to lose any opportunity that brings us around using those names. So obviously we have to give careful considerations that, you know, if we dropped Vocare and Greenbrook and went for, you know, totally urgent care, which would seem a natural step, you know, that wouldn't disadvantage us in any way. So, but it is something that we're looking at, and if there is good reason to do it, then yes, we will do that.
That's great. Thank you. The next question we've got in: with the wealth of experience Totally has and shortage of nurses, would it be feasible to set up a training for potential new and existing nurses to work within the NHS? Again, perhaps I can address that one to you, Wendy.
Yes, and we already do. We established, I mean, Greenbrook established, and obviously that became part of Totally when Greenbrook came into the group. There is already a training programme in Greenwich, at Greenwich University, where we sponsor emergency nurse practitioners as they're key to our workforce. And what we do is we go through the training with them, and then they, as a payback for that, we ask them to work with us for a locked-in period of time, and then obviously it's free for them to go and work where they will. So not only is it helping us, but obviously it's also helping the NHS. So we already do it, and one of the things that we're wanting to do is whether we establish that in another part of the country as well.
Thank you very much indeed. And the final pre-submitted question we've got, and I think you have touched on this slightly in the presentation: in light of the current share price collapse, do you feel that by not putting out forward-looking forecasts, shareholders are worried about the future performance of Totally, and do you anticipate issuing guidance in the near future?
Yes, we do want to issue guidance as soon as we can. I hope that during the presentation I've managed to describe the different moving parts of the business and the difficulties that we've got around forecasting what's going to happen. And I mean, you know, a big driver for that is the fact that with Brexit last year, with the election, which there was purdah around, you know, no new business coming out, followed by the pandemic, we haven't seen the number of tenders coming out for us that would have been in a normal year. And the forecast that we'd already got out there, obviously, when we put those forecasts together, we didn't have any of those things. We didn't have Brexit, we didn't have the election, and we certainly didn't have a pandemic. So our world has changed lots. And with the turn down of the elective work, with not knowing where the pandemic's going, everything's just too many moving parts. And the one thing I hope all of you will know is that when we say we're going to do something, when we set expectation, we like to deliver on that. And it's so easy to get those things wrong. So we do want to put guidance out. And as soon as we feel that there is something that we can rely upon, we will be doing that. The next time the market hears from us formally, it will be on our interims. But I would hope that we could put something out before then, all being the pandemic shifts, and that's the bit that really does make me nervous. It means the big part of my business will respond, but in terms of the way we conduct ourselves, the way we secure new work, it's just all changed, and as I say, too many moving parts.
That's great. Thank you very much. Obviously, we have had some questions come through in the live event, and as I say, I know I haven't given you a huge amount of time just to review them, but you know, if there are some that you can answer, fantastic. The rest we can address post-event, if not. But if that is the case, I could just hand over to you just to go through them, please.
Yes, yeah. I mean, I'm looking at them online, and so I'll take them first, and then Lisa, if there is anything you want to add, please do so. So, in no particular order, is it you say when you're working through them? But there's a question from Nick J. What's the average lengths of your contracts? Nick, that does vary depending upon the divisions. They all work in different ways, but if I just quickly separate them. So in urgent care, generally speaking, the contracts are for a 3-year fixed period with an option to extend for a further 2 years. we are seeing at this time with the pandemic and tenders not coming out that actually contracts are being extended beyond that time period. But certainly when we secure new contracts, they are generally 3+2. And the way those contracts work is we agree a value and we agree an approximation of the activity that we're going to deliver within that contract. And the way that they're paid is for the annual value, we receive 1/12th payment every month. We know exactly what day we're going to get paid in the month, so we can correlate that through with payroll. And then quarterly, we reconcile back on activity. And certainly in urgent care, activity tends to be higher than those that are within the contract, because we see demand going up above that. And I think Lisa touched on this, but we are being paid separately for the coronavirus additional work that we've been doing above and beyond those contracts. In planned care, they're similar, tend to be block or cap and collar, paid in exactly the same way, and the majority of those are 3 years +2. With our physiotherapy contracts, we see a lot of contracts that are AQP contracts, any qualified provider. So that's where you register onto a framework, and then you are authorised to work in a particular geography, and GPs choose where they send the referrals through. So typically there'll be 10, 11, 12 qualified providers in an area, and the GP surgery will pick who they want to work with. So it's not as definite, and again comes down to the relationships that you've got locally, which we put a lot of effort into. And then lastly, in insourcing, they work off framework agreements, and NHS England, Scotland, Northern Ireland and the Republic of Ireland have their own frameworks, and annually they'll open those frameworks up for organisations to register on, and you go through, it's a little bit like an interview where you have to give audit details over patient satisfaction and all kinds of other information around pricing. If you're accepted on that framework, that again is published, and when a hospital wants to do a waiting list initiative, they go to the framework and they contact you and negotiate a particular price. I'm very pleased to say Totally Healthcare are on every framework across the UK, and every framework was opened to allow us to actually register. So although they work in a different way, those contracts tend to be 6 months at least, and then annual rolling, where you negotiate as you're coming up to the end of the 12-month period. So I hope that answers the contract length question. There's also another one on the screen from Abigail J. So well done to management and staff, a great job throughout COVID-19. And when tendering for new contracts, who are the main competitors and what differentiates you in the bidding process? So again, that works differently across the divisions. And I think the big thing that differentiates us, if I take that bit first, is quality. If you do not deliver high quality services, and if your patient satisfaction rates are not very, very high, then it's very rare that you will be asked to go back and work with the NHS, because the one thing that it needs from all of its partners is its ability to enable patients, to feedback that the treatment they got was above good wherever possible, and that they were seen quickly, efficiently, treated with courtesy and respect. And that's why we put so much effort into turning around our ratings with the Care Quality Commission and maintaining them at a high standard. And you will have seen in the presentation the high levels of patient satisfaction in insourcing, where that is particularly important. So we base ourselves on quality, and if we can keep demonstrating that. We also don't overpromise. We always underpromise and overdeliver. That's where we always want to be. And again, who are our competitors? So in urgent care, and again, it depends whether it's 111 or an urgent treatment centre, but typically Care UK, Virgin Healthcare, and there are other players around, but it depends on the service that you are tendering for as to who that competitor will be, and similarly with our other divisions, and certainly in insourcing, I think the two main players in insourcing are 18 weeks support and Medinet. And again, I think our position is growing, as Lisa mentioned, in terms of the order book and the forward look. Another question on here is from Colin M, around share buybacks, and Colin, you've written, with the share price today near 15p, down significantly from the recent 25p and a fraction of the 50p it was a few years ago, will you be considering share buybacks at the low levels, and if not, why not? With anything like this, I think it's been difficult to know. I am surprised by the price dip, and so are our brokers. We met last week with every one of our investors, institutional investors, and a fair number of new institutions that are not already invested, and not one of those institutions was surprised that we remove guidance. And in fact, our largest investor actually said he would have been surprised had we not, given that we are 100% healthcare who are working through a pandemic, which is a once in a lifetime event, and very few people living remember the last one. Our brokers are looking at where we are with it. We did seek authorities to do a share buyback some time ago, and were advised again by our broker and Nomad not to do it at that time, because they believed that just doing a share buyback to prop up your share price wasn't the best thing to do. And I know people will be sitting there exasperated, but however many people we ask for an opinion, you get a different opinion. So there are so many different opinions. So the share buyback there is not a we won't do it or we will do it. It is something that the board will consider. But obviously we'll stay very, very close to our advisors in Nomad, and we've got joint brokers who will be advising the company on the right thing to do. Lisa, is there anything you want to add to what I've answered?
No, I don't know. I don't think so.
Okay. Okay. There's another question on here from Andrew N. Should we be worried about the former head of Greenbrook leaving the group? No, absolutely not. And I really don't want to be disrespectful to Michael Steele at all. Michael built a really good business in Greenbrook with his colleagues, but the intention always was that Michael would work with us on integration and then move on to his next opportunity. So, the integration went very well. And it was just a matter of timing as to when Michael will step back, and he's actually left to go and take a chief exec role in a charity, which was always the thing he wanted to do. And I think at the same time, when you look at the businesses that we've acquired, most of the people build these businesses and they sell them because obviously they build a business to sell it, don't they, and profiteer from that. And Michael knew that Greenbrook was in safe hands. He's overseen the integration. He has overseen, alongside myself and Lisa and Gloria, my quality director, the appointment of the senior team to take the urgent care division forward. And I think his job was done, quite frankly. So it's a bit of a non-event for us. But again, that's not in a disrespectful way at all. We're very respectful of the business that Michael grew.
Wendy and Lisa, thank you very much for your detailed response to all the questions, the pre-submitted and the live ones, and thank you for taking the time in your roadshow to include all investors. I don't know if there's any sort of closing comments you may want to wrap up with, and then I'll just direct the investors to provide feedback and we can conclude the presentation.
Yeah, I mean, I think just to round up, thank everybody for taking the time to join us today, and I hope it's been useful to everyone. And if there are things that we haven't answered today, please, let us know. We pride ourselves in trying to work with investors proactively. But I guess the overriding messages for us was we didn't remove guidance to shock the system. We removed guidance in a genuine response to working in an environment with so many unknowns. We do not believe that we will be impacted massively. If anything, we will be a net beneficiary, but it's just when will these things start out again and what will they look like going forward? So I'm very proud of what we've done. The staff have done a fantastic job, and the feedback that we get from the services we provide is above and beyond what anybody would expect. So no, thank you very much for joining us today.
That's great. Thank you, Wendy. And as I say, thank you to you both for your detailed answers to all the questions we've had today. I'd just like to remind investors that recording this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. Please don't close the sessions. You'll be automatically redirected for the opportunity to provide your feedback, which is obviously very important to the company. If you access the meeting from our website, the feedback page will appear in front of you. If you came through the link sent via email, you'll be asked to log in to submit your feedback, so please do so. That concludes today's presentation. Thank you for everyone attending, and Wendy, Lisa, thank you for taking the time to make All Investors part of your Investor Roadshow.